What is the outlook there for 2025?
If you look at the GDP growth for India, the nominal GDP growth is expected to be around 10%.
2025 gonna be good, bad, or meh?
If you take a step back, the US dollar has strengthened ever since we had the US elections.
CPI numbers indicate cooling.
We are bullish on both Indian equities as well as bonds.
Hello and a very warm welcome to Navigate with HSBC, where we talk about wealth management, financial outlooks, and investment insights. Whether you're looking for investment opportunities, market updates, or actionable strategies, we've got you covered. Let's dive into today's episode. I'm delighted to have Abhilash Narayan with us, investment strategist with HSBC. And together, we will explore India's financial growth story and what the future holds. First of all, thank you so much for giving me your time.
Pleasure to be here.
Corporate earnings data, which influences market trends all the time. What is the outlook there for 2025?
Yes, I mean, with the slowdown in GDP, there have been renewed concerns around corporate earnings. Now, on our end, we expect corporate earnings to be around mid-teens for the next couple of years. But clearly, downside risks have risen to a certain degree. But I think there is one very important mitigating factor. If you look at the GDP growth for India, the nominal GDP growth is expected to be around 10%. And that means that it provides a backstop to corporate earnings downside should, estimates start getting revised lower. So when we look at earnings, that's one story. Valuations, which used to be a big headwind for a lot of investors, valuations have come down a bit. So we think that it's difficult to time the bottom, but the levels right now are starting to look attractive enough to start slowly averaging in and buying the Indian equities.
Wonderful. Where is the rupee standing? 2025 gonna be good, bad, or meh?
Well, depends on how you look at it, right? So if you take a step back, rupee has depreciated, 3.5% over the past few months. And that's been down to a combination of factors, right? So one is that at a global level, the US dollar has strengthened ever since we had the US elections. And INR is not immune to it, right? So rupee has weakened in line with a lot of other currencies. But it's important to note that rupee has weakened less than some of the other emerging market currencies. So rupee has been more resilient. Secondly, I think there has been a shift in the RBI policy, right? So the new governor has indicated that he's more willing to let rupee vary according to market-based cues. And that's to be expected. I mean, we've seen RBI's FX reserves come down from 704 billion to 625 billion, right? So that means that the bar for further FX interventions is slightly higher now. When we put all of these together, we think that, rupee could weaken.
Abhilash, we're also looking at high inflation numbers last year. CPI numbers indicate cooling. What do you think will be the factors influencing?
Well, if you look at the latest inflation data points, they do point to the fact that CPI inflation, especially food inflation, is starting to cool down. And if you look at the data, especially vegetable prices from the first few days of January, now there is a risk. We've seen heightened FX volatility in the past few weeks. And if that volatility persists, then there could be a case that RBI delays the rate cuts further down the line. But overall, we are still looking for 50 basis point rate cuts this year from the RBI. And that at the margin has the potential to boost the market sentiment as well as GDP growth. So we are bullish on both Indian equities as well as bonds.
Wonderful, Abhilash. Thank you so much for this wonderful interaction. It was very, very insightful. And I hope to continue these conversations in time to come.
My pleasure. Thank you.
All right, that's it for today's episode of Navigate with HSBC. We hope you gained valuable insights into making informed financial decisions. Stay tuned for more expert perspectives on wealth management and investment trends. Until then, invest wisely.